Is the stock market bound to crash in 2023? Investors everywhere are in a frenzy, and the internet is scary predictions galore. Hey there, guys, what's happening, and welcome back to our YouTube channel. Hope you're all doing well today. Keep watching this video to learn about the stock market's scary predictions for 2023. Is this just another bear market rally blip? The discussion about the Fed not changing its hawkish outlook on the economy, new inflation still above 8%, and more news about the intention to raise interest rates plagued investors this past week. The gas pipeline bombing and Putin's assertion that Ukraine is on his territory were unhelpful, and they portend an economically challenging winter for Europe. Where in Europe are the bull conditions? Will banks suddenly start lending to home buyers if rates do fall? Will things suddenly change for China and Europe? Is this rally just another cunning bear market rally that will surprise pessimists? Jim Cramer made a good point about the bulls being upset with the bears. Could this merely be a teenager taking a petty stand against reality? Today's news contained reports on rising oil prices and unemployment that indicated the opposite was happening. Oil stocks have soared today as a result of the Saudis' recent announcement that they're prepared to cut more than 1 million barrels of oil per day. This week's earnings and wage reports will be closely watched by investors. According to today's ISM manufacturing report, it decreased to 50.9 from 52.2 expected. Are investors getting a sneak peek at the results of the upcoming midterm elections? It makes sense that this will be the most important issue for the markets, given that the elections are only 4 weeks away. Investors would be thrilled with a Republican victory because they believe it'll prevent further interest rate and tax increases by the Biden administration, as well as crippling regulations on U.S. manufacturing and energy supplies. If there was less regulation, supply might go up. Biden announced new capital gains taxes that are intended to hit the wealthy but come at a bad time for the economy, but that bill must be approved. Events this week indicate that the final quarter will be volatile and that an economic recession is still on the horizon. The hurricane in Florida will have an impact on this winter's travel season and the U.S. GDP. As more investors sold their holdings and moved into cash last week, the trading volume increased. Oil struggled to keep up, and bonds struggled as well. The outlook is bleak for the final 3 months of 2022. The upcoming 6 months into 2023 will be revealed by the elections. Investors who are looking 5 years out will find some fantastic buy-the-dip opportunities. Energy surged ahead today, while investors completely ignored consumer staples. People seem to have forgotten that we're currently experiencing a severe recession. Sam Stovall, the chief investment strategist at CFRA, issues a caution in a recent interview with Yahoo Finance. Bear markets with recessions have ended up being deeper and lasting longer than those without a recession, with an average decline of 35%. He believes the S&P will bottom out during this current bear market around 3,200. Investors may be swayed by the media and politicians to fail to see the impending dangers. Suppressing demand while keeping the market supply closed is a political gambit with serious repercussions. Investors are concerned about poor choices and significant market reactions as market volatility rises. More investors will want to sell off as risk increases. Divergent opinions exist regarding what will occur in 2023. Not every factor is present for the following year, but in the near future, the crucial decision is whether to sell. This week, the majority of commentators have been talking about how the markets will hit new lows in 2022. The Dow has dropped by about 780 points and the S&P by about 140 points following Jay Powell's rate announcement. Given the Fed's stated intention, that's minor. Everyone is anticipating some sort of failure. Investor caution will increase as the Fed raises the benchmark interest rate. The following rate increase in October may tip things over the edge. The 3 to 6 month forecast appears bleak. To survive the recession, those who are still investing are looking for defensive stocks or hedging strategies. Persistent inflation and the Fed's certain response. In order to achieve the Fed's goal of reducing unemployment, profits must fall and both consumer and business spending must halt. According to experts, the Fed is concerned with the unemployment rate. It will take a few months for the current upbeat attitude to fade, but 2023 will do so. Job claims decreased, job growth continued in August, and wages increased, so it's clear that the Fed will need to raise rates significantly to reach its target unemployment rate of 6%. Given the significant reduction in energy prices, the most recent CPI inflation rate of 8.3% was disappointing. The big news is that the housing market is on the verge of a severe collapse, which would aid in reducing inflation. The Fed may view this as a loss they can live with and a means of lowering the headline inflation rate. Since the housing market is seeing an increase in foreclosure activity, September statistics should be more sobering as more mortgage holders fall behind on their payments. Regarding stock prices, valuations, and market direction over the next 3 and 6 months, experts have differing opinions. Investors might only agree to buy now and take advantage of the price recovery over the following 5 years. The hundreds of billions of dollars in cash, however, could instantly convert into stocks at any time. Investors aren't that naive to purchase stocks at this time. A very high dollar, $1.10 on index that gives U.S. producers significant headwinds clouds the picture for the United States. As the Fed raises rates, the dollar should remain strong. Additionally, markets don't bottom out until rate hikes stop.